Imagine a world where money moves faster than governments, where trillion-dollar corporations pay less tax than you do on your morning coffee, where gleaming office buildings in Amsterdam, Dublin, and the Cayman Islands are nothing more than postboxes, yet control the wealth of nations. This isn't a conspiracy theory. It's the global tax system, and it's working exactly as it was designed, for the rich, by the rich, and behind closed doors. While countries slash budgets for healthcare, education, and infrastructure, multinational giants quietly shift billions across borders, legally, dodging the taxes that fund the societies they profit from. This is the story of the biggest loophole in modern history. Now, why the Netherlands? Good question, you're smart. It's not just the charming canals or the surprisingly tall people, it's the tax system, a system so welcoming to big business. It's practically laying out a red carpet made of untaxed money, a very plush, very green carpet. The Dutch have some clever tricks up their legal sleeves. One is the participation exemption. Sounds boring, I know. Stay with me. It means profits from subsidiaries, often poof, tax-free in Holland. Then there are the tax rulings. Sweetheart deals cooked up in advance. Companies get certainty. Certainty that they'll pay very little. And royalties. Oh, the royalties. Payments for using a brand name, or a secret recipe for, say, chicken. These can flow through Dutch companies, often with minimal tax bites, like a tiny polite nibble, instead of a proper chomp. It's all perfectly legal, you see. That's the beautiful, horrifying part. So, the Netherlands isn't a pirate cove. Not like those sunny islands, with their treasure chests and parrots. No, this is sophisticated, civilized. It's tax avoidance with a nice suit and a sensible haircut. It's the quiet engine room of global corporate tax minimization, a powerhouse built on paper companies and very favorable laws. Let's talk about the food, specifically the Dutch sandwich. Sounds delicious, right? Maybe with some Gouda? Wrong. It's a tax strategy, and it leaves a bad taste. For everyone but the company. It's a way to make profits vanish, magically, into thin air, or more accurately, into a tax haven. Here's how this culinary nightmare works. The multinational assigns the rights to its patents or trademarks to a Dutch subsidiary. Then, its other branches, often in high-tax countries, pay large royalty fees to that Dutch entity. On paper, these branches show reduced profits or even losses, which means they owe little or no tax. Meanwhile, the Dutch company receives the royalties but pays little to no tax on them, thanks to favorable treaties and legal loopholes. In effect, profits are shifted out of high-tax regions and funneled through the Netherlands to reduce the company's global tax bill. Then it passes the money on to another company, often in a zero-tax location like Bermuda or a filing cabinet in one. Think of it like this. Profit is a slippery fish. Countries want to tax that fish. The Dutch sandwich is a series of nets, with very specific legal holes. The fish swims through Ireland, then through the Netherlands, and ends up sunbathing in the Caymans. Tax-free, of course, the fish is very happy. Taxpayers? Not so much. And it's not just sandwiches. There are double Irish arrangements, often involving Dutch components. It's a whole menu of tax avoidance, crafted by clever lawyers and accountants, people like early Sophie. They create these complex structures. Letterbox companies spring up, no real employees, no real office, just an address and a big fat pipeline for cash. Sophie learned the ropes quickly. Her desk was piled high, with intricate corporate charts, arrows pointing everywhere, like a madman's treasure map, except the treasure was untaxed profit. She drafted documents, setting up Dutch special purpose vehicles. Sounds impressive, doesn't it? Often just a legal shell. This was the game of flags. Companies shopping for countries, looking for the best tax deal. A little bit of profit here, a dash of intellectual property there, all routed through the Netherlands to minimize the global tax bill. Sophie saw it all. The biggest names in the world. Playing this elaborate game, it felt like a puzzle, a complex intellectual challenge. And Sophie was good at it. Her bosses praised her, her salary grew, she was a rising star in a galaxy of tax avoidance. But a tiny voice started to whisper, a nagging little doubt. Is this right? The amounts were staggering, billions of euros, dollars, pounds, siphoned out of public coffers, money that could fund schools, or hospitals, or roads. Instead, it boosted share prices and executive bonuses. Sophie pushed the thoughts down. This was legal. This was her job. But the whisper grew louder. So who cares if companies save a bit or a lot? A whole lot. Well, you should. We all should. Because when multinationals don't pay, someone else has to pick up the slack. Guess who? Yes, it's you and me, small businesses, ordinary workers. We pay our taxes. They play hide and seek. Developing countries get hit hardest. They desperately need tax revenue to build basic infrastructure, to educate their children, to provide health care. But Dutch structures help drain that money. It's like a reverse Robin Hood, stealing from the poor to give to the very, very rich, and doing it with a polite smile. Sophie started seeing the connections. The abstract numbers on her screen translated into real-world consequences. A hospital wing unbuilt, a teacher's salary unpaid, a community left behind. The efficiency she helped create had a very human cost, a cost rarely discussed in those shiny Zuidas offices. Her internal conflict grew. She was good at her job. She was helping clients. Legally, of course. Always legally. But the system itself felt wrong. Was she part of the problem? A well-paid cog in a giant machine? A machine designed to starve the public good for private gain? Sleep became a little harder to find? Now you might be thinking, surely the Dutch government knows. Surely they'd stop this. Oh, you sweet summer child. The ties between the government and the tax advisory industry are cozy, very cozy, like two people sharing a very small, very lucrative blanket. A blanket woven from tax loopholes. Many Dutch policymakers and tax officials move seamlessly into private sector jobs at these big law and accounting firms. And sometimes, back again. It's a revolving door spinning with shared interests and a shared understanding that the system, as is, benefits some very powerful players. This creates a culture where the interests of multinationals are often prioritized. The argument is always competitiveness. We need to attract investment. Jobs! Think of the jobs! Even if those jobs are just a brass plaque on a building and a part-time administrator for 1,000 shell companies. Sophie saw this firsthand. Senior partners at her firm had easy access to officials. They'd discuss new legislation, often shaping it to ensure it didn't upset the apple cart. Or, more accurately, the money cart. It wasn't usually cloak and dagger stuff. It was polite lunches and influential committee memberships, the system protecting itself. But then, things started to shift. Slowly at first, like a giant turning in its sleep. The world began to notice. This quiet Dutch tax paradise wasn't so quiet anymore. Journalists started digging. Activists started shouting. The Panama Papers, the Paradise Papers, they exposed the scale of it all, the sheer audacity. International bodies like the OECD and the European Union started to feel the pressure. Base erosion and profit shifting, or BEPS, became the new buzzword. A global effort to make companies pay tax where they actually, what a radical idea. Groundbreaking, really. The Netherlands found itself in an uncomfortable spotlight, no longer just the land of tulips, but also a key enabler of global tax avoidance. This wasn't a good look even for a country that prides itself on pragmatism. The pressure mounted both from outside and within. Sophie followed these developments closely. A flicker of hope ignited. Maybe things would change. Maybe the loopholes would be closed. Her firm held meetings discussing the implications. There was concern, yes, but also a sense of adaptation. The game might change, but the players aimed to keep playing. And so, the Netherlands began to act. Sort of. Ish. They introduced some reforms. A withholding tax on royalties and interest payments to low-tax jurisdictions starting in 2021 and 2024. It sounded good on paper. Look, we're doing something, the government announced, with a slightly forced smile. But here's the thing about tax loopholes. They're like whack-a-mole. Close one, and another pops up. Especially when the whackers are also the mole breeders. The new rules had exemptions, and new structures were devised. The game of flags just got a few new, slightly different flags. Business as almost usual. Sophie saw the new strategies, the clever workarounds, the enduring desire of clients to pay as little tax as possible. Legally, of course. Always legally. Her disillusionment deepened. The reforms felt like window dressing. a way to appease international critics without fundamentally changing the system. The core business model remained intact. The Avoidance continued to hum. Money still flowed, perhaps through slightly different channels, but it flowed nonetheless. The Netherlands was still a vital link in the global chain of tax avoidance. The Dutch touch was still in demand. Sophie realized the problem wasn't just laws. It was a mindset, a culture, a deeply entrenched economic model that was proving very hard to shift. By early 2024, Sophie had enough. The moral gymnastics became too tiring. The justifications wore thin. She looked out her office window at the picturesque canal and saw the murky water beneath. She handed in her resignation, leaving the world of high finance and its high-stakes tax games, a world of shadows and fine print. Sophie decided to teach economics at a secondary school. She wanted young people to understand how these systems really work, who benefits and who pays. She wanted to foster critical thinking, not just how to read a balance sheet, but how to question its implications. It was a big change, a significant pay cut, but a lighter conscience. Looking back, as of today, June 5th, 2025, Sophie sees some progress. The global conversation on tax is louder, more insistent. Some egregious loopholes are gone. Transparency is slowly increasing. But the Netherlands remains a key player. A tax haven in a tailored suit. Old habits die hard, especially when they're so profitable. The fight for tax justice continues. It's a marathon, not a sprint. The structures are complex. The vested interests are powerful. But Sophie holds on to a sliver of hope. That with enough awareness and enough public pressure, real change can happen. The quiet empire of Dutch tax avoidance might one day become just another story in a history textbook she teaches from. If this opened your eyes to how the global tax system really works, make sure to hit like, subscribe, and turn on notifications. There's a lot more they don't want you to know. And we're just getting started. Thanks for watching.